everyone, and welcome back to your StockCharts TV segment of Mish's Market Minute. I am your host, Mish Schneider, and once again, I have an overly ambitious agenda for us to cover. So really what I wanted to do was talk about what I see that's hot right now. And of course, we have to understand that most of this depends a lot on what happens with the overall market. Clearly, we get some kind of meltdown, then most commodities and most stocks will also have a meltdown. So at this point, assuming that we're going to keep the status quo in the market, I want to cover some Chinese companies, some solar stocks, some fuel cell companies, food commodities, and foreign ETFs. Some of that is a follow-through of what I've done with you all a few weeks ago. So let's start with Chinese companies first. I've been very interested in Chinese companies for several reasons, not the least which is that every Tuesday now I am doing a segment on China TV, filmed in New York and then gets broadcasted and translated into Mandarin into China. So that has given me a new interest into Chinese stocks. So we're going to look at BIDU, IQ, CASI, and China. So let's start with that and start right away here with BIDU. So you know that BIDU is an internet company, Chinese internet company. And so what we're going to look at is the regular chart, the price performance versus the SPY and the real motion. Now, what's interesting about BIDU is that I know a lot of you may read my daily that gets covered on StockCharts on the blog page. And as of the weekend, I had mentioned that I really liked the fact that this was holding over the 200-day moving average, offering a very low risk. So the ideal entry was really on that Monday, actually this past Monday, when it opened up and cleared up over 114.50, which was like a 30-minute opening range, closed well, and then you got the gap up. You actually had almost an immediate risk reward. But if some of you missed that trade, now I wanted to take a fresh look at it. So right now, let's move here before we go through the recommendation. This is doing very well versus the SPY. You can see it's well outperforming. And even though we had the high here, back then in terms of its outperformance, we're kind of matching it right here. So that's number one. Number two is look at the real motion. This is also doing very, very well on real motion. In fact, even though the price is consolidating here, the momentum is still going up. So at this point, what I did a little bit differently for you this week was actually write in text what we could be looking at as a potential recommendation. Now, I want you to know that I definitely want to say that trading, you do this at your own risk. I make these recommendations. You have to decide how you want to handle the trade. You know, you can always find me on Market Minute at Twitter if you have any questions, but please make sure that you manage these the way you want to manage them. And I'm giving these as recommendations, but not hard and firm places, areas. So for example, with this one, BIDU closed right above 123.30 today. If it can clear 124.60, so that means that I really want to see it get back into the bar of this day right here. Then you have a risk to right underneath the 10-day moving average at 117. And remember, if you're going to risk, in this case, $4 or $5, then you want to make sure you make at least $10. So I have a generous target here of about 140, but 135 to 140 would really be your first area of taking profits. Now let's move on to the next one. Now, BIDU had actually just done an interesting merger with this company called IQ, which I'm not even going to try to pretend I can pronounce the name, but basically it's a Chinese video streaming company that's kind of like the Netflix of China. Now, they had a story about the merge with BIDU, and that's when you saw this great gap up here, as you can see. But what really interests me about this stock, and probably likes even better than BIDU, is that we're getting two inside days, which means you had the big outside day, then yesterday was an inside of that day, and then this trading day was the inside of the day before. When that happens, basically what you want to see is it at least clear the nearest outside day. So in that case, that would be 25.50. However, I'm saying 2660 because of a weekly chart that I'm not showing you, but essentially there's a really clean trend line that breaks out over 26 to 2660. So let me temper this by saying anywhere from 2550 to 2660 on a weekly closing basis, closing out Friday, would be a good area to get in. And a risk would be under 2250, which literally means I would have to hold this gap and I would get out if the gap starts to fill. And then, of course, what you're looking for is 46. I'm saying this one, if it holds this gap, would be something to hold on to, looking for the all-time highs, which was around 46, and then maybe even new highs. Now, if you're looking at it a more active trade, obviously if you're going to risk $3 to $4, then you really only have to make $6 to $8 before you actually can start taking profits, and that would really put you more at around the 32 to 35 level. Now, what's happening here is, look at this, price performance well outperforming the SPY, and the momentum just went nuts on this after it had that big gap. Plus, I really like the idea that's a video streaming company in China. The next one is CASI, and CASI is a pharmaceutical company in China. I really wanted to find one that covered in the biotech space, because as we know, there's a lot of race that's on right now amongst many countries to try to find a vaccine for COVID. And I don't know if this company is actively involved in that, but what I do know is that the chart is very interesting to me. So what you have right now, let's start down here. It's not quite outperforming the SPY yet. It would have to clear this red line, but it's giving it a little bit of a run for its money, mainly because the SPY, by the way, is over the 200 and this is still under the 200. But what intrigues me about this particular instrument is on real motion, the momentum is increasing. Here is your 200-day moving average where it's trading above, and here is your 200-day moving average where it's trading below. So momentum is increasing while the price hasn't quite caught up. I've shown you these kind of trades before. So that's why you want to see a price confirmation before you get in. And that to me means that you would be looking at this to close over 275. Even though this is trading right here at 270, I wanted to give it a little margin of error. Your risk can be under 225, which would really be under these lows right here. So risking at about 50 cents, which means that you can look at $1 or higher, 375 or higher. This is obviously not an expensive stock, and that's why we don't have very lofty targets. And I just wanted to show you real quick that there's actually a biopharma ETF. That's all of the Chinese biotechnicals, and that's a Long Card China Biopharma CHNA. Now, I do have to warn you, this is a very low volume trader, as I mentioned right here, but I just thought it would be interesting to track anyway, if you wanted to see how biotech was doing in China versus the United States. Well outperforming the SPY, and doing very, very well on the momentum. Kind of got into a little bit of congestion here. We had made a new high and then reversed and then actually broke down the next day. So essentially in those type of situations, when you get those higher highs, close near the low, and then the next day it closes below that low, is in order for you to really be able to say you're safe to get in, you have to see that high taken out, which means you'd have to buy it over 29.50, risk to under 26.50, and I'm assuming at this point this will move up the 50-day moving average. And then you're going to look for a new high on this too, because this is at all-time highs already, or around 34. But again, even if you don't want to trade these, they're fun to watch, and these are all momentum trades, by the way, not my usual let's find things that are cheap. But we'll have a couple of those too. So now let's move on to solar stocks. First Solar, Solar Edge, this is Janko and TAN. Janko being, by the way, another Chinese company. So let's move first into First Solar. I always like to tell you that we have skin in this game. We actually got long First Solar. What I liked about First Solar is the same kind of thing, is it's hovering around the 200-day moving average, but if you come down here where I'm pointing, it's above the 200-day moving average on the momentum chart. That's good, and it is outperforming the SPY, which is interesting considering the SPY is above the 200 and this is sitting right on it. So at this point now, we want to see it over anywhere between 50 and 51. That area is probably your buy zone. I would risk to under 45.74. I wouldn't want to give it all the way down to the 50. There's actually a weekly moving average that comes in at around 45.85. And then, of course, because you're going to risk about $5, you want to get about $10. And there's actually some classic resistance right here at 60 based on old chart pattern. So we'd be looking at 60 or better. When you look at this chart, by the way, spread out over time, you can see that really since 2013, this has been consolidating. And First Solar had some news about it today. It actually made a deal with Dow that it's actually going to start giving them supplies of solar panels. And I just love the whole solar space to begin with. Now this is Solar Edge. Looks a little bit different because this is already exploded. So we can see now that we had an inside day as of Thursday, sitting right on the 10, again outperforming the SPY. And even though the momentum is good, it's still really basically no divergence. It's in line with the price. So you want to see everything move up. After an inside day, you want to buy on the breakout of the outside day. So that's 154.75, and that's the reason why I wrote these down, so I'd be very specific. And then you can risk to under 143, which really basically is underneath here or underneath the outside day low. So we could do this more actively because we're not giving this a lot of room. It's got to go or not. Now this has a $9 average to range. It's a big stock. So that means if you're going to risk that, then you really basically need to find about a 175 area profit target, which again implies new highs. So like I said to you in the beginning, this is also going to be very much dependent, even though that's acted differently than the rest of the market, on the market not totally falling apart. Now here's one that's cheap. This is the Chinese one, Jinko Solar. And let's start down here first. So first you can see that this is underperforming the SPY. Well, that's certainly no surprise. But what's interesting to me about the real motion is that, yes, of course, it's not over the 200 like I showed you with some others, but it's sitting right on the 50 as this actually on Wednesday and Thursday of this week broke down under the 50. So that makes this kind of similar to what I said to you before about that other instrument that has to actually show that the price performance meets with what we're seeing in the real motion indicator. That means to me that we need to see a confirmation of a 2 days close over that 50-day moving average, which comes in at around 1606. So you'd want to see 2 closes over 1606, so that may not really give you the information you need until Monday. But then I would risk about $1. But what I really like is that if it makes that confirmation on the 50, which by the way is sloping here slightly positive, it could easily get up to the 200 and stall, and you could still get to a profit target because essentially you'll be risking about $1, maybe max 2 to try to make 3 or more. That's not such a bad thing to look at. And of course you want to see that momentum hold here too. And I just wanted to show you TAN. TAN has been one of the best performing instruments in terms of the sectors in the overall US stock market. It's just kind of slightly really in line with SPY, and again showing some momentum here, but not nearly the momentum that we had on the last peak that we had up here, which is right here. So I don't love this trade as much as I like, let's say, the others I just showed you for Solar and Genco in particular, but it is having an inside day. So once again, you would have to buy over the outside day high, which is 36, risk $3, which is under the outside day low, so again more active, hoping that if you can risk $3, you're going to see $6 or about 42, which again is not out of the question because that's a recent high that we've had here. And this whole space to me looks really strong. All right, let's move on. Oh, my goodness. First, I always have to take a breath at this point. People tell me I talk very fast, and I know that's true, but that's why I can give you 20 different stocks to look at in 29 minutes. So now let's look at fuel cells. This is another hot area. A lot of this, by the way, if you'll notice the theme other than biotech has to do with alternative energy, and I'm really, really big into the alternative energy. Even if the oil prices go up, ultimately I would still rather be looking at alternative energy going forward for many, many different reasons. Now, We've got 3 stocks here: Plug, BLDP, and Fuel Cell. So let's start with Plug. Now, this is also an interesting company because what they do is they provide hydrogen fuel cell or turnkey solutions for electric mobility, and they also power stationary markets in North America and Europe. So that's a big area for this to cover. This, obviously with Tesla trading around that $1,000 mark, even though we haven't seen other electric car companies do nearly as well, clearly this is a hot space to be looking at for the future, and you can see another momentum stock. So right now, if we come down to the price performance here, we are definitely outperforming the SPY. Obviously, no divergence here. We peaked up here, and now we're kind of inching up. And then if we look at real motion, same thing. We peaked up here on the day when we had this big spike high here, but now again, it's holding, and I like the momentum rising here. So the way I would look at this, by the way, this is not also an expensive stock, it's only trading at in the $5 range, is I'd want to see a weekly close over 557. I decided not to show you the weekly charts and the daily, just tell you the daily chart, show you the daily chart, but give you the weekly chart numbers. So there's a reason for my 557. That would be the highest weekly close we would have had in a long time. So if it closes Friday out over 557, you can risk to under 430, which, by the way, I like a lot because that does mean that you're going to hold down to the 50-day moving average. And then you'd be looking for a move at about 750 or higher, which would also, by the way, take this to new highs. Now, another one that looks a little bit different is Ballard Power Systems. Now, what this company does is they basically make heavy-duty fuel cells for power systems. All energy here. Now you can see this chart looks a little bit different, but still not an expensive chart. We're talking about a $14 stock. So if we take a look at this one, let's start down here. I like the fact that the price is continuing to do very well, especially relative to the SPY. Again, we had this peak here, but it's not too far off from this peak price here. Even though the price is down, the momentum, not the momentum, but the price performance is showing it's getting darn close. And again, if you look at the real motion, we had the peak here, but again, now look at the momentum starting to move up, even though the price has come off a little bit. So these, obviously, none of these you can risk to a 50-day moving average, and that's why you have to look at them more actively, except for the couple that I show you that you're going to trade against the 50-day moving average or wait for a phase change on a 50-day moving average, like I showed you with Janko. But with this one, now you have to see it clear 1465. And that means that I really wanted this to just, at this point now, take out that spike high. You can risk down to under 12. So now you're looking at really basically a risk down below all this work it's done recently. And then, of course, you'll be looking again for new highs on this because a lot of these are new issues, or around $19 to $20. Now, Fuel Cell is, I want to show you a couple of ones that have already blasted off and ones that did and have made a good correction so you can get a whole other risk-reward perspective. And Fuel Cell, by the way, it has subsidiaries, but what it does is it designs and it manufactures and installs, operates, and services the stationary fuel cell power plants. So, you can have all these fuel cells that make them, but there's got to be somebody who can maintain them, and that's why this company looks a little bit undervalued to me at $2.25, but we'll see. Let's start down here. This is underperforming, obviously, the SPY, but again, what interests me here now is the momentum, because you can see the momentum has broken down under the 50, even though the price is still above the 50. So essentially, what I would want to see now is some sign of strength. Now, you don't necessarily have to wait for the momentum to take out the 50. You just have to understand your risk reward. So that's why I figure at this point, this has to take out what was the opening of price on the day of Wednesday, and that's at 240. Then you can risk to under that 50-day moving average. So literally risk about 40 cents on this. And then you would be looking for about 80 cents or 320, and that's just really where it's been recently. So that's a pretty reasonable thing to look at. But remember, the real motion has to improve as well. Not that I would necessarily wait for it, but I would keep an eye on it or ask me about it, because you want to see this thing start to move along. All right, let's go on now to my food commodities. They look very, very different here. We're going to look at coffee. We're going to look at sugar, corn, and soybeans. All right, now, one little note about this. This comes right from StockCharts, as all the charts do, and this is the continuous contract that StockCharts has in coffee. The issue is this: it doesn't update till the end of day, and when I was speaking to the staff at StockCharts, they told me end of day could be 6:30 Eastern Standard Time. So since I'm actually recording this earlier than that, I'm just going to have to tell you that this looked really good as of Wednesday's close, but actually you're probably going to see that it's closed back down here. Now, the reason why I'm bringing up coffee is because we talked about it last week as a trade recommendation. If it's set up a certain way, it had made a new low and it had to confirm. It didn't. So if we look at a week ago, I can't really look at this chart. We'll look at JO on that, but it didn't confirm, so we never got in. Then when this made this price movement yesterday, I thought, well, if we get another move up around 98.15 on JO, you'll see in a moment, that would be a confirmation, and it still didn't. So what I'm saying about coffee right now is this is not ready to move up yet. So what we want to see now is a brand new low. We want to see it take out this low right here and then reverse. So we're resetting the clock on this trade. Underperforming here, and you can see the momentum, even though it's improved a little bit, this is not updated yet, definitely has to improve. So let's go right to JO here, which is easier to see. This had an inside day. Now this actually did reverse as it made a new low, had an inside day, and then closed on Wednesday above that. But remember what I've told you. You can look at these ETFs, but you have to really regard what's happening in the underlying futures. Otherwise, it doesn't really count. So that's why you want to see now coffee futures maybe make a new low and restart that clock. But nonetheless, nothing about this chart looks very interesting to me right now. The momentum is declining. The price has declined. But I still think you keep your eyes on it, because we are in an interesting season in Brazil. Although they're not talking about frost, they are looking at the possibility of drought. Now let's look at sugar. Same deal. End of day, continuous contract, not up to date. Sugar futures actually closed down today at about 2%, which probably means this is going to be looking more like here when it finally gets the update. But it's still outperforming on the SPY, and you can see that the price here on the real motion is sitting right below the 200, just as the price is sitting right below the 200. So really at this point it makes it easy that you want to see the sugar futures finally clear over its 200-day moving average. And of course, assuming most of you are going to be looking at the ETFs, we look at cane. So now cane is nowhere near its 200. You see how you can see how the underlying makes a lot more sense than the ETF, but it's sitting right in par performance with SPY, and even though it's far from the 200 here, it's also far from the 200 on the real motion. So again, this one, I wouldn't necessarily say you have to wait for this to go all the way up here. At this point, considering the cash, if the cash goes over the 200, you can go in and buy the actual ETF in the cane. I'm waiting, we're already in this. I'm waiting for but just a small position. We're waiting for a close now, probably over 588, 586. That would probably tell me that the futures is over that 200. And then, you know, you can really risk to under the 50-day moving average here, or about 40 cents. Now, corn, we're not going to look at the underlying in corn because this has been a pretty reliable ETF. What I like about corn here is, first of all, I'm not showing you DBA because I did get a very legitimate comment last week from somebody who said that DBA is got all kinds of issues. It's expensive to trade, and it has certain, if you want to go back and look at the comment, the guy did the research, and I appreciate that. So instead we can look at the individuals. So now with corn, look how it's dancing on the 50-day moving average. And it is on par performance with the SPY, and even though this is very, very far from the 200, it's far from the 200 here, but it's increasing a little bit in its momentum. So what I'd like to see with corn is when you get this kind of consolidation, you have two choices. You can either go in and just say, I'm going to buy it over the 1230, which would be this 10-day moving average right here, and stop myself out if it breaks down under, give yourself a little room, 12. Or you can just wait for this to take this out altogether, which is at about 1250, and then risk to under, let's say, 1210. But nonetheless, this is also keep an eye on here and related a little bit to the oil market. And the last commodity is soybeans. Again, we have a position in soybeans from lower prices. We got in after it cleared the 50-day moving average on par with SPY. Also, momentum decreased a little bit today in terms of the real motion, but it's also consolidating. So at this point now, especially if you look at a weekly chart on this, you really want to see this get back over, say, like 1405 on a closing basis. You can even risk down to under 1370. That would not be a crazy risk, and see if you can get up to that 200-day moving average. All right, last category here. Since we did a whole thing on foreign ETFs, I thought I would review a couple. Vietnam. Now, Vietnam, we had a position. It never cleared the 200. We wound up scratching on that position, and we are flat. So what I'd like to do now is see this set up again. Now, what's interesting is you had this gap down day, and then it came back up, and it's just consolidating. And look at the price performance, went below the SPY, but look at the momentum. This is what interests me so much about Vietnam, is that it's sitting above the 200 and increasing momentum while the price isn't doing much. Now, what I'd like to do is now at this point change my risk parameters than when I told you about this a few weeks ago, is I'd like to buy this on a closing basis over 1381. Even though the 10-day is a little bit higher than that. If you really wanted to be more conservative, say over 1395, but I would like it over 1381 on the closing basis, and then risk to under 1302. And that means you'd be risking about 80 cents, and at this point, you'd be trying to count on the fact that this would clear that 200-day moving average and move up. That's number one. The other one is the Netherlands. So I thought, why is Netherlands doing so well? Well, guess what their biggest resource is? Is Shell and Unilever. And so they're not only in the financial space with banking giants such as ING Group, but they also are heavy into natural gas and oil, North Sea drillings. They also have peat, limestone, sand, and gravel. So they've got a lot of natural resources in the Netherlands. And so if we look at this, you can see we've cleared not only the 200, but we're sitting here at the 10. We're well outperforming the SPY, and our momentum, although it's come off a little bit, there's no divergence. It's still holding above the 200. So with this one, I think it's pretty clear. At this point now, I would say that if you can get a close somewhere over this level here at around 3270, you could either take it under the 10-day moving average or under 32, risk very little, and see if you can get this thing back up to new highs here. You can see that a while back it was trading up at around 3330, 350. But I like this, and especially if oil continues to go up, this could be a very interesting play. And then the last one here is the Switzerland. Now, Switzerland is tied to, guess what? Gold. And so that's why we've been long gold, and we keep adding to gold, and gold has just been chopping around like crazy, but I still am very bullish gold long term. So that tells me now with this one here, you can see that we have the price outperforming the SPY. The momentum is over the 200. It needs to increase just a little bit more. But I would think now if we can get through these levels here, or the high from the other day at around 39.50, 39.30, you have a pretty good risk to under, let's say, the low that it cleared back over the 10, or this day would be at about 38.25. So about $1 risk to see if you can get $2. Again, this has been trading up there, and it was back in February before the crash. And that's it. That gives you a whole lot to look at over the weekend and review. Maybe get into some of the stuff on Friday based on the closing levels I gave you. And if not, you have a very good list to look at on Monday. I thank you so much for watching and staying with me. And I hope you all have a great weekend, and bye for now.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment, we'd love to hear from you, and most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.